Hey, it's Clay, and this will be the weekly review of the Power Profit Scan newsletter, which is a portion of the subscription service that I offer. There's also a live trading room, but then you get the newsletter that is sent out, and part of the newsletter is just various setups as you're about to see. Before I get started, though, I want to map out a few things. First, what you're looking at here is behind the scenes. So when you log into your member portal through the account, you can just go straight to the scans here. They are also emailed to you, so it's just whatever makes your life easier. That's the idea behind offering it in a couple different places. And then first, disclosure-wise, am I trying to imply that every single alert and scan that I send out is some winner and there's money raining down from the sky? Unfortunately, no. I can't make that guarantee. I can't make that promise, but nobody can. No scan, no trader is perfect. But what it does illustrate is that winners happen. And when I say that, I say because winners happen, well, losses also do happen, and that's why you need to keep your losses under control. That's why you need to be a disciplined trader. That's why you need to be able to focus and understand how to properly analyze and implement risk control measures, because while losses do happen, like I said, winners happen. So when those winners do happen, you want to make sure you know how and have your account in a place where it's going to benefit from those winners. Whereas, if you take some sort of massive loss, well, then a winner's nice, yeah, but your account is still going to be very choppy if you're not managing the losses in the first place. But losses happen, yes, but winners also happen. So if anything, hopefully you take away the importance of risk management. Second, we are going back a ways into the history of things and going to look at 12, 17, 18. Why are you going back so far? That's a valid question. Just to first off, simply give the chart plenty of time to have played out. So now we know what's happened. And then second, just a matter of being fair. If you had paid for something and all of a sudden you see it out there on the internet for free, you'd probably feel a little bit ripped off and you would be justified in that feeling. So those are the two reasons why we are going back so far. So let's get to it. A few more notes before we start here with this first scan that was sent out. This is sent out, this being the scans, every weekend on Saturday, usually Saturday morning, but that can vary a little bit. But they are sent out over the weekend so that you have plenty of time to put something together trade plan-wise and, just analyze the chart. It's not like it comes out and then you have only 2 minutes to make a decision. Nothing like that. Then the other component to watch is just simply the price. Hey, Clay, that's a common question I get. Clay, what sort of prices are you covering here? And as I always say, I'll cover anything. If I like the setup and I think that the setup has some maybe probabilities in our favor of success, then I'll cover it. Price is very, very far down the list. For this one, we're talking about a stock that is sub $3. So with those things out of the way, you can see here, threw this into the panic play category, ticker symbol ALQA. And just a matter of, yeah, it gapped up, yeah, it had volume. But you don't want to chase or anything like that. So let's see if the price could potentially pull back to right around that 225-ish area. So let's see how this one played out. So again, this is what you would have saw going into the weekend. So the next candle that you see will be on that Monday of the new week. So let's see how this one played out. So you can see right there on Monday, the price actually pulled back and the low was at 226. So essentially bounced right off of that 225-ish area. Let's see how it played out from that point. Next day, gapped up as high as $2 and let's see, what was the high of that? $2.62. So, there was actually a good solid amount of room here for a potential trade. Because, if you think about it, and I don't know the calculations right offhand, but if you got in right around the 225-ish area and it went up over to 250, which it did, that's a good little profit window percentage-wise. Now, looking at the chart, it doesn't look like it barely moved, but you got to keep in mind when you're below a $3 stock, that was a good percentage move. But for whatever reason, I just want to say, let's say you didn't take any profits, you didn't sell, you didn't do anything. So I'm definitely erring on the side of, just kind of making some bad assumptions on your part. Like I said, I would like to think that at least some profits would have been taken, but nothing has occurred. So let's see what's since happened from there. We can see the price now just falls and falls, and things get pretty nasty there all the way down to the $1.73 mark. So just keep that in mind. This turned out to be a losing trade, quote unquote. If, like I said, that's kind of like I said, I'm making a little some assumptions there, but let's just say it was a losing trade. But you know what, you kept it disciplined, and you didn't let anything spin out of control. It's not like you sold all the way down here at the bottom for some sort of maximum loss or anything, but you just kept it under control. So yeah, ALQA by no means was some sort of massive winner. Even if it you were able to pull a win out of it, it wouldn't have been a huge one, but for educational sake, let's just assume that, yeah, you had to take a small discipline loss on it. But let's now keep on moving to the next one. The next scan here was for ticker symbol PENN, and this was a channel pattern. And this one's a little unique in the sense of I actually threw up some notes that would have allowed you to make money from either direction. So I say right here, it could also be a short-sided trade if the price continues to the downside of the current channel. If you're new, what is short-sided? What does short mean? Short just simply means you make money when the price goes down. If a price goes down and you are short, you are making money. That may sound really weird, but that's what it means and what is possible within the market. Now, the lessons that can be taken away from this one is when you do short, when you have that ability in your tool belt, it opens up your world of flexibility, because when you stop and think about it, really you can only make money as a trader 50% of the time. If you can only make money by prices going up, well then, okay. But if you can make prices also when prices go down, you've literally doubled your flexibility. You now have two options instead of one. And that's very, very powerful. And that's, what I wanted to throw out here was that, yeah, it isn't, a channel that's working its way upwards, but if it does fall to the downside, you could still make money on it from the short side. Again, going short just means making money when prices go down. So let's see how this one played out. So here's that channel pattern and what it looked like going into the new week. So let's see how this one played out. Right away on Monday, it being the price did not waste any time, broke to the downside of that channel. So let's say you had the ability to go short and you went short. So meaning now we want to see the price fall. And if the price falls and goes down, that means that you're still making money. So let's see how this one played out. Nasty day right there. Things continue to fall. Things continue to fall. And then bottom was reached right there, and that was for a gain of, whoops, fell off the screen there, 23.1%. It did bounce back, but still plenty of a profit window right there. Now, am I saying somebody made played it perfectly? I'm not saying that, but let's say that somebody played it half right. That's still right around 11.5 cents. I mean, so 11.5 cents or 11.5%, excuse me. That's a nice little trade for basically a week or so of a trade. So very, very nice move there. But the point here, the learning lesson is you would have had zero opportunity at this if you're, oh, no, I'm not going to short. I only want to make money if prices go up. I mean, that's your prerogative, but just know that you're literally handcuffing yourself and removing a whole bunch of flexibility. From one way up to two ways, that is a 100% increase, right? If you double, that's 100%. So you can 100% increase your flexibility as a trader if you decide to start to learn how to short and put that into your trader tool belt. And here's a great example of it. And finally, with this big gain here, assuming you took the controlled loss on that first one that we talked about, this one would have easily taken care of those losses and, put your account, wiped away the losses and then put your account ahead. And then the final one to talk about is UBQU. This was a penny stock and simply a volume alert, as I alerted down here. Just absolutely massive volume, biggest volume that I had seen in a very long time. And yeah, price-wise, to go back to that first point, now we're talking about a stock that's at 0013. I forgot to mention the price of PENN, the one we just looked at, but that was up in the $20 range. So we've talked about a $20 stock, a $3 stock, and now we're talking about a sub-penny stock. So like I said, I'll pay attention to the price, but there's a lot of other, things that I'm more concerned about. So as far as, well, what sort of price range will I get? You'll get probabilities in terms of, what I think may be a high probability setup to produce a winner. But let's see how this one played out. Now, I did need to change chart providers here. eSignal, which is what you were seeing, they don't really like penny stocks too much, so now I'm using TradingView here to go through it. So that's why the change here. But so this is what the chart looked like when it was alerted. Let's see how it played out. Not very long, needed to be waited at all. On Monday, the price made a huge move up. So I'm not assuming that you nailed the bottom or anything like this. My calculations are based off of an entry point down around here. So it's not like I'm saying you absolutely nailed the bottom for these calculations. I'm trying to be as conservative as possible. But the next day it was not done. It gapped up and spiked that much more for a total profit window of 115% before, as a penny stock, it collapsed. Pretty shocking. But again, am I saying that anybody played it absolutely perfectly for 115%? No. But again, let's say you screwed up 50% of the trade. That's still over, a 50% move. So a 50% move for essentially 2 days, you're not going to get that at your local bank. So definitely a nice move there. But again, it all circles back to keep your losses controlled. Keep the risk under control, because losses, it's going to happen as a trader. But when it does happen, just keep it controlled, because while losses happen, winners happen. So when these winners do happen, which you've seen here in a couple instances, let those winners take care of those losing trades. I hope you found all this helpful and maybe some sort of educational examples in it too. But if anything, you think, well, yeah, I want to join, well, great. You can go to claytrader.com/inner circle, or just go to claytrader.com and you find the inner circle tab on the website itself. You get a bunch of other things I mentioned already, but the live trading chat room is the other big one that comes with it. So if you want to trade alongside me during the day, that's fine, or that's part of it too, and is more than fine. We'd love to have you. There is a mobile app too, so it's not like you have to stay chained to your computer or anything like that. You can keep up to date with everything, no matter where you are. And as far as the price, $99 per year. Not per week, not per month, not per quarter, per year. If you break that down even further, as far as the math is concerned, it's $8.25 per month. Or if you break it down to what does that actually cost per week? $1.90. So just set aside your Starbucks coffee for one day. I'm not saying every week or every day you can no longer drink your Starbucks, but just one day. Set aside your Starbucks, latte, frate, bate, whatever those things are called, and you could afford it. So no excuses. And as I always say, over the time span of 12 months, I'm more than confident you'll get at least $99 worth of value. So if you have any questions, let me know down below. Reach out to me on social media, whatever makes your life easier, and I will do my best to answer any questions you have. But I hope you decide to join us.